Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
The S&P 500 is up about 10 points, fractions. Dow Jones Industrial Average is up 2/3 of 1%. The Nasdaq's down fractions. Russell 2000's down about 1/2 of 1 percentage point. I would say as the morning is going on, the S&P and Nasdaq look like they're struggling to maintain, and they look like they're slipping. Bitcoin sits up 721 to 67,277. Gold sits up 1.1% to $4,577. 10-year Treasury sits at 4.33%. Crude oil and Brent crude both higher, 3% on crude oil to 103. Brent crude up 2.2% to 107.67. The headlines aren't very friendly today. Talking about oil prices, talking about Americans having spent an extra $8 billion in gasoline since the start of the Iran war. That ultimately means $8 billion not going to restaurants, not going to savings, not going discretionary spending in the United States. Tax refunds are up nearly 11%, with over 37 million Americans cashing in on new tax breaks. That's being offset, though, obviously, by the rise in oil and gasoline. Average tax refund up 11% to $3,571 compared with the average last year of $3,221. The S&P 500 has dropped 5 weeks in a row for the first time in nearly 4 years. That's revived the familiar argument that the stock market is top-heavy. Interesting stat, Google has alone made 270 acquisitions. YouTube alone carries an estimated value of about $500 billion, weighty enough to become one of the 20 largest companies in the United States if it were spun out. Top-heavy. Brent crude at one point this morning topped $116 a barrel as Iran war continues. On Sunday, Iran's parliament speaker warned that U.S. troops would be set on fire if they entered the country, as President Trump made a series of escalating statements. The commander-in-chief posted on Truth Social that the U.S. had destroyed many long-sought-after targets in Iran. He told the Financial Times his favorite thing is to take the oil in Iran. That's an odd thing to say. He could seize Kharg Island. He could bomb Kharg Island. He's maintained that a peace deal could be around the corner. This morning when I woke up, I looked at Asian stocks. Japan's Nikkei 225 was down about 3%. South Korea's Kospi was off about 3%. Aluminum prices. Check out aluminum. That is the next big commodity run. It's up about 6%. Trump's tariffs are kind of backfiring. He wanted aluminum made in the United States, but we don't have enough smelters. And when you do, it takes an enormous amount of energy. That's why a lot of aluminum's manufactured in the Middle East, because there's a cheap cost of energy sitting right there. The average MBA tuition is rising up 11%. Business schools face higher operating costs, including faculty salaries, which jumped 17% between 2021 and 2025. Sony's going to raise the price of its PlayStation 5 again, bumping the number to 650 and the Pro to 900. BTIG's Jonathan Krinsky says we have felt the S&P 500 had risks towards 6,000 since we became cautious on March 12th. The S&P 500's down 5 straight weeks. He's talking about the weekly relative strength index is down to about 35, and there's decent support at 6,150. We still think 6,000 is possible before all is said and done, but as we get closer to that level, we get more oversold. The sentiment becomes more bearish. The odds of a counter-trend rally become higher, and the risk-reward of being negative becomes less attractive. They think the most important chart in the world is NVIDIA because it's the largest stock in the world. It just broke lower for a 9-month trading range from a 9-month trading range, meaning there are a lot of trapped buyers. He thinks there's risk on NVIDIA to 150. And again, because we're in a top-heavy market, it's really not the Magnificent 7. It's more like probably the Magnificent 70. Jonathan Krinsky talked about the software index, IGV, and how it's broken down from Claude, disrupting cybersecurity stocks. The extreme oversold condition present in February has worn off. A break below 77 would suggest a move towards 70. He also talked about restaurants sort of rolling over, if you will. Higher gas prices and economic slowdown worries taking their toll on the restaurant stocks, which were already well off from recent highs. And my personal commentary to add on that is restaurant stocks are going to get hurt as long as oil stays above where it is at this current time and gasoline prices stay higher. Remember, gasoline prices tend to shoot up like a rocket, come down like a feather. Federal Reserve is looking through oil price shocks, so says Federal Governor Miron. He's an FOMC voting member. He thinks Fed funds rate cut could be a point with 3 cuts this year. In order to get an inflation shock from oil, he says that the Federal Reserve can affect. It needs to affect inflation beyond a 1-year horizon. And so there is no evidence of that. Longer-term inflation expectations have been coming down. He would be more concerned about the need to counteract pickup in both inflation and oil price stock. If there was a wage price spiral, no evidence of that thus, or if inflation expectations picked up more than a year out. He doesn't think the Iran war has made it harder for him to dissuade other voters from possibly dissenting from not cutting rates. He thinks we could be about a point easier than where the Fed funds rate is. Thinks that the labor market is on a gradually cooling trend for the past year and thinks inflation is heading back to a target year over year and a half from now, which is why he thinks the Fed should be cutting rates now. Monetary policy needs to be forward-looking, not based on the last 12 months of data, but on what the expectations are for the next 12 months. He thinks private credit should not be introduced into the financial condition indices because you don't get accurate mark-to-markets. Thus far, he doesn't think what's happening in private credit presents economic risk, but it can feel it potentially if it gets worse. Default rates picking up more than difficulty accessing credit. He thinks there's the element of the Fed now fighting the last war in terms of inflation when it wasn't transitory like the Fed thought it would be. He'll stay at the Fed until Fed Chairman nominee Warsh is confirmed. He would love to hear Fed Chairman Jerome Powell reaffirm Fed's traditional views on oil price shocks. Next up, Meta's in the news. Big today. Price target was lowered from $8.25 to $7.75 at Morgan Stanley. We know that they lost 2 social media cases last week. With juries, we know there's going to be more. The company slashed 1,500 jobs as part of its pivot away from the metaverse. It added more expenses to an already astronomical outlay for artificial intelligence. Its artificial intelligence division isn't really showing much other than internally on media buying. Add the headlines to the turmoil wrought by the Iran war, and Meta shares are down 20% this year. Brian Nowak, he's an analyst at Morgan Stanley. He's not moved. He still calls it an overweight, $775 price target. Naming the company a top pick in his coverage, Nowak is one voice in a chorus of analysts backing the stock. I talked about that on my Friday strategy show. The ad business, which itself leans into AI and machine learning, will give the company a solid base even as it spends eye-watering sums on AI. Meta has a $135 billion capital expenditure target for 2026. Some investors seem queasy about the spending. Of the 73 analysts who track Meta, 66 rate Meta the equivalent of a buy. None have it rated as a sell. No firm has rated Meta as a sell since October. The average price target of around 860. So Morgan Stanley comes in around 775. A lot of Tesla stories today. Elon Musk confirms that Tesla is making a big investment in Japan with service and superchargers. Many of the parts in Teslas are made in Japan. Panasonic has been their biggest strategic supplier over the past 2 decades. Gordon Johnson, an analyst at GLJ Research, said, quote, "We reiterate our sell rating on Tesla. It's got a I don't know what his price target is. It has to be a misprint. He has a $24 price target on it. His final first quarter delivery model incorporating GLJ's proprietary VIN-based U.S. production channel check Looking at China's production and European country level registration tracking through February 2026. A lot of shipping intelligence involved. U.S. Motor Intelligence says monthly sales figures yields at about 368,478 total deliveries for the first quarter of 2026. Despite delivering above consensus volumes, he maintains his sell rating. Tesla's automotive earnings trajectory is a 25% decline versus the third quarter 2025 delivery peak of about 497,000 units. He cannot support a trailing 302 times trailing PE, and the volume uplift is disproportionately driven by a margin dilutive subsidy arbitrage in Korea rather than the organic demand recovery, and also a depressed first quarter 2025 base of 336,000 units, which was severely impaired by the multi-factory Model Y Juniper changeover. Tesla right now is trying to end a 6-week losing streak. Tesla stock dropped rough last week. Shares are down about, 20% this year. Tesla's better than expected fourth quarter earnings report was the start of a downward streak, though. The company announced earnings per share of 50 cents. Wall Street was looking for 43 cents. Still, that was down from 73 cents a share earned in the fourth quarter of 2024, so their comparisons are looking bad. Uber is acquiring Blacklane. So what does Blacklane do? It is tied towards luxury and executive travel. I kind of like this idea. As I'm getting older and wealthier, I'm realizing I'm not going to be able to spend my wealth. Never thought that was going to be the case in my teens, my 20s, my 30s. My 40s, I started catching on like, wow, I do have a lot of money. And now that I'm in my 50s and slowing down my career, I'm thinking, how do I spend this? So Blacklane and Uber, their respective guests and partners, will benefit from each other's expertise. Blacklane's luxury service and specialist knowledge, combined with Uber's global scale and technology, they'll deliver a powerful platform for growth. Think limousines and chauffeur service. I saw a story on Tiger Woods that he got into another horrific crash. And I'm like, why does this guy drive? Like, why doesn't he have a driver? And it turns out he doesn't have a driver because he wants his privacy and he doesn't want someone knowing where he is 24/7, 365. Alaska Air is lowering its first quarter profit forecast due to a surge in fuel costs. Alaska's down 6% today. The airline now expects an adjusted loss between $1.50 and $2 a share in the first quarter, deeper than its previous guidance. So the update on worse earnings was tied towards fuel costs, of course. Refining margins for its cheapest jet fuel, sourced from Singapore and representing about 20% of overall supply, have spiked 400% since February, from average about 45 cents a gallon to $2.25, 20-year highs. Alaska said it's seeing encouraging revenue trends heading into the peak summer travel season, despite severe flooding in Hawaii and reduced demand to Puerto Vallarta due to increased cartel violence. Mexico. 5 straight weeks of losses on the S&P 500. Bond market struggling. This would be technically a bad year to retire. What can you do about it? Educate yourself. Get feedback from financial planners for free by coming to my next event. It's Pints and Portfolio. Saturday, April 18th. It's really informal. So a few people have signed up. It can only fit 10 people. So sign up today at robblackshow.com. It's in Sunnyvale, California, 11:30 to 1:30, Saturday, April 18th. If you're in retirement or close to retirement, this is a perfect event to come and talk to a financial planner, talk about what you're doing right. We can see what you're doing wrong, give you some feedback. Afterwards, we'll give you a preliminary plan, which is what you get when you work with a financial planner, a financial plan, which is typically up to 300 pages of details about your finances, ranging from everything from insurance to investments to your savings to assets that you have that might be underperforming, like real estate, where you have a rental and you're only getting, let's say you have $1 million home and you're only charging $20,000 in rent. That's underperforming. You need to be charging $60,000. Otherwise, that asset should be used elsewhere. You can sign up for the event. It's coming up. It will fill out. Sunnyvale, California, Saturday, April 18th, 11:30 to 1:30. Coming up, again, another segment. I'm Rob Black.
Join Rob Black in Sunnyvale Saturday, April 18th for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by from 11:30 to 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, April 18th in Sunnyvale. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this Sunnyvale event and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
Wolf Research upgraded CrowdStrike this morning to outperform from pure perform. This stock, when it's done going down due to the software as apocalypse scenario, could do quite well. But Anthropic released a new model that is pending release. I said that incorrectly. Anthropic has a new model that is pending release. Year-to-date, software as a sector is down 27%. CrowdStrike's down 21%. CrowdStrike trades at roughly 13 times and 40 times EV 2027 revenue, free cash flow on their updated base case estimates, which are both below its 3-year average. It looks like an incredible bargain unless Anthropic bots can cleverly put them out of business. But the bots probably need security. I don't think cybersecurity is so important going forward. And do we totally trust Anthropic to run our computers for us at this point in time? And if they do, and you have passwords on your computer, that's kind of spooky. CrowdStrike trades with a great growth speak English, it's Monday. Let's try that one again. CrowdStrike trades with an accelerating growth profile and expanding margins. And it's a platform position in the security market that should benefit in an increased threat environment. Additionally, shares now trade at a meaningful discount to the 3-year average multiples mentioned that I've run through. CrowdStrike is rated outperform, in my mind, as soon as the market is done forgiving software. Man, that Anthropic release of Claude really shook things up, to say the least. Bernstein analyst says Oracle is a better story than they thought, with better upside potential. Price target's 319. It's more than double the closing price of Oracle last week. Oracle's doing some things on cash where they say, if you want to use our data centers that we're going to build, you got to put some money in now. It's a clever way of managing cash flow. Citizens Research started Netflix at market perform. Sees it as the second largest streaming platform globally, behind only YouTube. They believe Netflix's scaled audience, combined with its recommendation algorithms powered by vast proprietary data, creates a meaningful structural advantage. As distribution has become effectively frictionless in the streaming era, value has shifted away from individuals' content assets towards platforms that can best organize. They recommend and surface content to users. Netflix scale and personalization capabilities enable it to consistently drive viewership across its library. I hate myself. This weekend, I did a scroll through my Netflix account, and I think my spouse has been watching TV on my show, on my account. We have a family account, 4 of us. And when she watches stuff like Bridgerton pops up in my algorithm, like, don't watch my account. But Netflix is able to get engagement from driving audiences to some of their lesser known content. Not all their content is going to be K-pop demon hunters. It's in a position as a default destination for many users. They believe Netflix's ability to aggregate demand and direct attention underscores a durable competitive advantage driven by its scale. I would buy Netflix today for my kids. I don't know if I need more of it. I probably need more income-oriented stocks, whereas younger people who have more time, I think Netflix is brilliant. They raised prices last week. Goldman launched coverage on Qualcomm at neutral. This used to be a loved stock. It is no longer beloved. Qualcomm is a fabless chip designer, widely known for its Snapdragon smartphone processors. Many of them are used in Google products and Samsung. With that said, they expect Google Pixel phones or their operating system, their Android operating system on their phones, to lose some market share this year to Apple and Chinese OEMs, which acts as a headwind to Qualcomm's fundamentals. Price target's $135, according to Goldman. Nike reports earnings tomorrow night. A lot of people see it as a buy. I look at their last 10 years, and they've increased their revenue aggressively, 50+%. And yet their stock is down on a 10-year basis. Deutsche Bank upgraded energy drink maker Celsius to buy from hold. There was a story last week about how Costco has launched an energy drink for less. The upgrade sends the price target for Deutsche on Celsius from $44 to $56. Colgate-Palmolive is one of those stocks that you can buy because we're going to probably be using diapers in the future. And it just got an upgrade today from to buy from hold. Price target of $98, up from $90. That's the kind of stock I probably want to be buying for the income of the dividend. I expect to live a long time, so I'm going to still keep a lot of my growth. But I've underweighted income for basically my whole life. Until the last 5 years, maybe. Anthropic's Claude popularity with paying consumers is skyrocketing. That's important. The company had the funny Super Bowl ad taking aim at OpenAI, and the surging popularity of Claude Code has made Anthropic more popular with consumers than ever. Taking a look at anonymized credit card transactions, we can see that Claude is gaining paid subscribers in record numbers. I told my wife to drop her subscription to OpenAI and switch to Claude. Or Gemini's fine too. Estimates for total Claude consumer users are all over the map. Anthropic doesn't disclose a lot of data. The majority of new subscribers at the lowest tier pro users, $20 a month, compared with $100 or $200 a month. Stock idea for you for the long-term patient investor. McCormick, it's a spice company. McCormick is eyeing up Unilever's food business, whether it's salty, sweet, umami, spicy, or sour. Americans have come to expect their food to really hit our palates well. I still like a very simply fried in canola oil piece of chicken with a little salt, a little pepper, maybe a little paprika or cumin. But my spice rack is out of control. McCormick has lent into acquisitions to add bold flavors to its portfolio. They bought Frank's Red Hot and French's Mustard in 2017. They bought the popular Cholula hot sauce in 2020. They do $7 billion a year in spices. They are the spice king, if you will. I don't know if I want them buying into other food products other than spices, but it's interesting that my kids today don't want bland, and they're going to be buying spices for the next many years. Right now, we're in a market that has a lot of war and AI doubts. It's fueling an unprecedented divergence between stock prices and earnings expectations. Analysts have ratcheted up their projected bottom line results for the largest U.S. publicly traded companies by over 8% over the 3 months, which just ended. March is not quite ended, but in the last 3 months, it's pretty close to ended. Over that same time, stocks are down about 8%. Stocks have never been down that much when earning estimates have risen by that much. So the oil price spike has got us thinking maybe a recession down the road. The mega caps are feeling big pain right now with AI. Meta's down on multiple issues, AI and court rulings. Google's YouTube has slowed things down for Alphabet. Prosperity in the country and the world is here. It's just not evenly distributed. At the start of Biden's term, most Americans, not most, 53% approved of the economy. By the end, it was down to about 32%. Trump started with approvals of about 44% on the economy, and it's now down to about 29%. So people are feeling pain. And yet we're creating more household wealth, and we're starting to distribute it as baby boomers are starting to die. It's interesting. When I got into this industry, our conversations were about baby boomers retiring and how they're going to leave the workforce and start taking pharmaceuticals, and that was a great play. Pharmaceuticals, for me, income only. It's tough. You're seeing companies like Eli Lilly, Novo Nordisk. They had great gains going into GLP-1s, but since they've been kind of working it, if you will. AI video generation is 2,000 times more energy intensive than text. Maybe that's the reason why OpenAI just shut down Sora. Sora burned about $15 million a day. I'm starting to have concerns on Sam Altman at ChatGPT and OpenAI. He's pulling in the reins on spending or on projects. He's got to get a better model out because I gave up on him. Listen to this. 4% of YouTube videos account for 94% of views. 3% of videos on Instagram account for 84% of all views. 5% of videos on TikTok generate 89% of the views. That's fun stuff. I love data. I don't know if you've picked up on that from me yet. Pints and Portfolio coming up in Sunnyvale, California. It's an opportunity where I pick up the bar tab. Literally a free beer or two. Maybe some munchies if you want them. 11:30 to 1:30 in Sunnyvale, California. For investors who are 50 plus, typically heading towards retirement, this is a great chance to see how you're doing. Are you going to get there? I say 50 plus because if you're 45 right now, this is a buying opportunity in the markets. But if you're heading towards retirement, you want to get it right. I bring 2 CFPs with me. So there's 3 of us. I limit it to 10 people total so that we can do one-on-ones with everyone. We can pull people aside and talk privately if need be. After the event, we'll do a preliminary plan for you today. Not that day, but over the next couple weeks. There's beer and there's a lot of computer data that has to be input. So obviously a brewery is not the right place to do it. I bring Ryan Ignacio and Julie Jan O'Rourke. Julie's going to be my CFP when I retire. And I don't know if that's going to be at the end of this year or if it's going to be another 10 years. But it's coming. So this is an event for me too, if you will. Sign up for the event today. It'll fill up at robblackshow.com. That's robblackshow.com. I'll be back in the afternoon for the afternoon podcast. Market wrap up. This is the Market Open podcast. I'm Rob Black.
Join Rob Black in Sunnyvale Saturday, April 18th for Pints and Portfolios, a less formal event at a local watering hole for those close to retirement with $500K or more in investable assets. Drop by from 11:30 to 2 for a little sunshine and a complimentary preliminary financial plan from a CFP that Rob trusts at EP Wealth Advisors. Whether you're on the road to retirement or already there, this preliminary plan can provide you with a second opinion analysis of where you are and highlight areas for improvement and opportunities for growth. That's Saturday, April 18th in Sunnyvale. Go to robblackshow.com and click the Events tab. Find Pints and Portfolios and click to register. You'll answer a few simple questions about your situation, and your confirmation email will provide all the details on the location of this Sunnyvale event and how to schedule your preliminary financial plan. Space is limited and registration is required, so go to robblackshow.com today. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.